Hello, very good afternoon to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Very good afternoon. Today will be Wednesday, the 19th of February 2025. So, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday in terms of the news flow, economic data release, and as well as the performance of the broad-based cross asset classes, and also as well taking into account of any particular specific important news flow and event that has taken shape early in today's Asia session before the start of today's daily dose. So let's have a quick look at the US stock market yesterday. So I would say that the US stock market yesterday ended the day with a rather upbeat note, but this upbeat note only came in during the last 1.5 hours of the US session for no particular catalyst. Right? There's no actually clear catalyst of any what I call it major news flow that impact the component stocks that cause it to rise. So it's more like a positioning impact or some positioning due to options. So what you could see over here is that at the start of the US session, this is the S&P 500, it actually was trading in a rather lackluster fashion. It printed the intraday low right exactly at around 3:20 p.m. AM Singapore time, 3:20 a.m. Singapore time. So that's left about 1.5 hours more to go before the US session ended. Then thereafter, it shaped that V-shaped intraday recovery where the SPX managed to close up to 6,129 with a gain of 0.24%. So that was actually a fresh closing intraday high, fresh all-time high closing level, pardon me. Similar for the Nasdaq 100 as well, where we also start to see the recovery took shape exactly at 3:20 a.m. Singapore time, which is up by 22,165 by 0.23%. So for those who follow our daily dose since Monday, we do have a continuation of that short-term intraday bullish bias on the Nasdaq. On the Nasdaq 100, taking into account of that short-term momentum that is still intact on the key technical elements which I highlighted in my usual daily dose intraday technical outlook for the Nasdaq 100. Rather lackluster is on the Dow Jones Industrial Average where it almost ended unchanged. All right, so but it managed also to shape that V-shaped recovery as well, the intraday V-shaped recovery, but it ended almost unchanged at 0.02%, and the Russell 2000 was the top performer at 0.45%. So what I could see over here is that the stock market is actually ignoring global macro drivers, which is technically speaking, it doesn't really support this ongoing bullishness in the intraday bullish momentum of the major US stock indices. Why? Because yesterday we do have another Federal Reserve officials echoing the prior day Federal Reserve officials, which is her colleagues. So Waller on Monday mentioned that he's not so in favor of cutting rates unless he start to see further evidence of inflationary trend slow down in the US. And another Federal Reserve official also echo his comment. So Fed Daly spoke yesterday. So she also mentioned that policy should be restrictive until inflation falls over here, because net overall, these two officials are more erring towards the camp of the less dovish side of the Federal Reserve officials, particularly due to the risk of uncertainty surrounding Trump trade policy, not only against China, but against the rest of the world. That means countries that has high trade surplus with US will be targeted under Trump's so-called internationalized trade tariff policy. So that also explained the reason why the dollar also strengthened yesterday as well. All right, so the dollar continues to shape a bit of strength in yesterday's Asia session, and now the dollar is actually rising almost against all the major currency with the acceptance of the sterling and the dollar yen. So the dollar yen continues to fall because of number one, we start to see much more strongful wording from BOJ officials stating that the Japanese economy is now on a firm footing, and it's the right time for BOJ to step up its much more proactive normalization policy. So bear in mind that BOJ is a different creature versus other developed central bank, because they have been late in terms of normalizing the interest rate on the upside, because they've been maintaining zero interest rate to negative interest rate in Japan for close to more than almost 10 years. So right now it's up to them to actually step up the proactiveness of normalizing the Japanese prior tenure of ultra low interest rate to back to a normal pace of interest rate to the positive side of the story. So that actually saw the dollar yen to actually weaken as well, which is also in line with our intraday bearish bias on the dollar yen yesterday when we covered the short-term intraday technical outlook as they actually start to show signs of exhaustion below the dollar yen 200-day moving average that's acting at the 15280 level. So I'll touch more about that when I cover the intraday technical outlook itself. And also the US stock market also ignoring this new yesterday's US market intraday bullish momentum, also ignores Trump's latest trade tariffs plan. So this time he decided to target product specific right now on US auto, drug and chip imports. All right, so what he did mention over here is that previously there's another 25% tariff on steel and aluminum product base. That means any from any other country that produces steel and aluminum heading into US will be taxed by 25% tariff, and that will take effect in March. And that particular detail hasn't came out yet. And from there, yesterday he also did mention that there will be 25% tariff on new products that is mentioning will be especially the chip imports, US automobiles and drug. So this will come into impact on the April the 2nd. Okay, 2nd of April over here. So market actually choose to ignore this particular news flow because market now still has a belief that whatever Trump trade tariff policy, how big the number, Trump is being transactional. That means this particular high tariffs number targeting XYZ countries will tend to be watered down as the deadline passes, potentially Trump extracting some gains from this targeted major trading partner. So market is having this view on that, particularly on the US stock market, which continues to actually ramp up to fresh all-time high on the S&P 500 and the Nasdaq 100, but not so much on the US the FX market, where I mentioned earlier on that the FX market now continues to see a bit of dollar strength coming back into the picture yesterday, taking into account of a less dovish Fed speak, which is Fed Daily, Fed Daily and Fed Waller with the previous day, encouraging interest rate in US should stay higher unless there's a clear downtrend in inflation. We call it inflation numbers in the US, and also on top of the upcoming new product-based 25% tariffs on automobile, drug, and chips, where Trump actually announced yesterday, potentially taking into effect on the 2nd of April. That also causes the dollar strength to come back yesterday on the intraday basis as well. And let us now take a look at the so-called the Fed funds futures market based on the CME Fed Watch 2. So based on this particular Trump's so-called new trade tariffs plan targeting automobiles, drugs, and as well as chips, semiconductor chips, there is very no change in the Dow of the next upcoming FOMC meeting, which is 19th of March. High probability that the Fed will remain on hold, 97% at 4.25% to 4.5% based on the CME Fed Watch 2 calculated from the various contract month of the Fed funds futures market as being we call it transacted by market participant. And if you look at the aggregated probability, that means stretching from the various Fed funds futures contract that is expiring time according to the various meeting dates of the FOMC down the calendar. So what we could see over here is that market participant now has reduced the chance of the next interest rate cut that's expected in June and July. Previously, before the Trump new trade tariff plan targeting the semiconductor chips, and as well as the current before the latest two Federal Reserve official speeches, that is tend to be much more less dovish. Market now has adjusted the expectation to be much lesser. So only 52% chance that the next cut will come in 18th of June, down from about 70% chance that was about 2 days ago. And the higher odds now has been pushed down to July, to which is at 70% chance on the 30th of July FOMC meeting. And what we could see over here is that, interestingly, the December meeting has the odds of slightly above 50% has vanished. So on the 10th of December, the 2025, the last FOMC meeting in this year, market is now expecting the Fed not to cut at all, because only a 45 or 46% chance, below 50% chance. 2 days ago, it was slightly above 50%. So market is only expecting the next interest rate cut will come in 2026, somewhere around in uh, March and April, because it has a higher chance of 61% and 70%. So based on the latest news, relevant news flow on the Federal Reserve pertaining to the US Federal Reserve monetary policy, the CME Fed Watch 2, taking into account of market participant price action transacted on the Fed Funds futures contract, now market is only looking at potentially only one interest rate cut to come in 2025. So that actually is supporting the yesterday's uptick in the US dollar index. That means dollar strength coming back to picture, except for the dollar yen, because dollar yen is a different creature that which I explained to you earlier. And also because of this trade tariffs uncertainty, and also because of this we call it a potential of inflation resurgence coming into US. And with, if Trump really pushes through this trade tariff plan, tit for tat measures may come in, it will impact global growth. So that is a stagflationary risk scenario. That means low growth, high inflation. That actually also benefited gold as well. So gold continues to rally yesterday, up by 1.2%. That came in within our our expectation. When I cover yesterday short-term intraday technical outlook, almost hit the fresh all-time high at 2,940 level, because it printed high, it printed about 2,930 intraday level. So later I'll share with you what is the current take on gold right now, right, when cover the short-term intraday technical outlook. And also another news flow on to highlight over here is more pertaining to oil price, WTI price, pertaining to this potential US brokered peace talk deal between Russia and Ukraine. So right now there's this ongoing we call it preliminary talks between US officials and as well as Russia, some of the Russia officials and European leaders in Saudi Arabia, in kind of a neutral ground. But the key thing, the key surprise over here is that Zelensky, which is the president of Ukraine, decided to postpone his meeting between these key stakeholders uh, this week. All right, so he did mention over here is that he has postponed. What's this is not the exact peace talk. It's more the preliminary peace talks to find out the needs and wants of the both of all the stakeholder. So Zelensky said he has postponed his visit to Saudi Arabia, which hosted this preliminary findings for this peace talk negotiation between Russia and Ukraine, that was actually planned for today. So he decided to postpone until March the 10th. So that also causes the WTI crude oil price to rally as well to about 0.2 or 0.3%, which also came in within our expectation. And because of this, we call it Zelensky throwing this kind of surprise to this ongoing peace talk negotiation process, stating that perhaps he's not very happy of the way this peace process is being dealt with at the moment in terms of preliminary finding. So that also causes the euro dollar to slide as well. Okay, because we know that one of the pertaining euro dollar strength last week was this we call it market optimism that this peace talk between Russia and Ukraine may actually loom around the horizon, and they may actually found a breakthrough after 2.5 years of fighting, right, in European zone backyard, right, over here. So that is the key news flow that takes shape today. And another particular news flow on the highlight is more on RBNZ over here. So we know that today RBNZ actually announced its interest rate decision. So it moved in within market as expected. So the cash policy rate was reduced by 50 basis points to 3.75% from 4.25%. And during the press conference, RBA governor mentioned that yes, there will be still cuts in the coming next 2 meetings or 3 meetings, but it will move in smaller steps. So now market is still expecting on dovish RBNZ, but it will not be a 50 basis point cut going forward. So it will be likely a 25 basis point cut, at least 2 more before 2025 ends. So what we could see over here is that the Aussie Kiwi continues to remain firm, which I highlighted yesterday as well. And over here is that the Kiwi just traded sideways from here. All right, the Kiwi against the dollar. So what we could see over here is that the Kiwi dollar over here is starts to actually inch downwards as well. As you could see, the dollar Kiwi initially the dollar rallied. Then after that, the dollar starts to sell off against the Kiwi. So it's more of like a sideways based formation at this moment in time. So all right, so now another news more likely on the highlight is more pertaining to the Chinese stock market over here. So what you could see over here is the Hang Seng Index today managed to consolidate, but the Hang Seng Index is actually down negative 0.2%, but the higher beta, the Hang Seng Tech Index is up 0.4%, still pretty much rosy because of Monday's potential breakthrough, potential change of strategy of the Chinese top leaders will want to detect. That means especially the meet up with key Chinese, we call it tech leaders. That means i.e. the common prosperity among the Chinese technology platform private sector may have started to shift. That means i.e. the Chinese top leadership wants now the Chinese tech company and platform company to take a leadership role in driving Chinese economic growth going forward, given that we know that the Chinese economy now is lack of business and consumer sentiment to boost spending. All right. So, but one thing positive that came out in today's Asia session was the release of the latest house price index of China early today's morning. Where was it? I think it should be here. Okay, give me a minute. I think it's where is this? Yes, the house price index. All right. So the house price index actually came in better than the previous month of negative 5.3%. So the growth, the deceleration of growth starts to slow down to negative 5%. So we know that the Chinese property bubble has burst and about 1.5 year, 2 years ago, and because of this stock of wealth using property as a significant stock of wealth in Chinese population, any slowdown in a further slowdown or deceleration of house price trend will also has an impact on consumer behavior and business behavior in China. So that is also one of the reasons that dampens the moods of consumer spending and business investment in China, and has this a problem of this ongoing deflationary risk process that's taking shape in China in the 1.5 years. So what we could see over here is that the new home sales has declined by 5% year on year, easing from a 5.3% drop in the previous month, and this marks actually the smallest decline since July over here. So you look at the 5-year trend, there seems to be a turnaround. Okay, the turnaround since the negative 5.2, negative 5.9% year-on-year decline that was seen in October 2024. So if the next month it continues to show further signs of improvement, that could also further supports this ongoing tactical rebound that has taken shape in the Hang Seng indices, right, i.e. which is representing the health of the China stock market. Okay, so these are the news flow, the events, and as well as the respective movement on the key broad-based cross asset classes that I want to share with you. All right, so now with that, now let us now kickstart our intraday technical outlook on the various broad-based cross asset classing, starting with the FX market first. So as usual, let me expand my screen so that you guys have a bigger view of the charts. So now let us start with the FX market, which is the euro dollar. So euro dollar, we have a bearish bias since Monday. Price action hit our first support yesterday at 1.0440 over here. No clear signs of any bullish divergence that have taken shape on the hourly RSI. So the hourly RSI continues to shape a series of lower high, what we could see over here. Okay, there is no bullish divergence. Okay, price action continues to inch lower low on the RSI, and also it hasn't hit the oversold region yet. Okay, so indicating the short-term intraday momentum still has a higher odds to remain into a bearish condition. So with that, we will tighten the key short-term pivotal resistance for today at this key minor congestion area that was rejected on Monday and Tuesday now acting as a Titan key short-term pivotal resistance for the euro dollar at 1.0490, and you do the Fibo retracement of this ongoing slide from last Friday intraday high all the way down to yesterday's intraday low. They also correspond to the golden ratio of 61.8%. So using a Titan key short-term pivotal resistance for the euro dollar at 1.0490 for today, we still maintain that intraday bearish bias. A breakdown below 1.0440 exposes the next near-term support to come in potentially at 1.0360, which confluence with the 50-day moving average as well. Only an hourly close and a breakout above 1.0490 will invalidate today's intraday bearish bias on the euro dollar to see a squeeze up to revisit the current minor swing high level, which is could be potentially a range resistance as well at 1.0530 next. All right, so still maintaining that intraday bearish bias using 1.0490 as my Titan key short-term pivotal resistance on the euro dollar for today. No change on the sterling dollar. So sterling dollar continues to trade sideways since last Friday. Still can't break above the short-term pivotal resistance that we have on Monday at 1.2670 level. Okay, 1.2670 level. So let me remove this. Let me remove this. Let me remove this. Okay, so the first support level to watch out for on the sterling dollar remains at 1.2540, still maintaining that intraday bearish bias. Only a breakdown below 1.2540 potentially exposes the next near-term support at 1.2480, which confluence with the 50-day and the 20-day moving average, acting as a similar support level as well. Only an hourly close and a breakout above 1.2670 will invalidate today's intraday bearish bias to see a squeeze up to give a test on the next intermediate resistance zone at 1.2780/2810, which being defined by the 1.382 Fibo extension taken from the low of 13th of January this year, and as well as the minor swing high area of 6th of December and 12th of December last year, and confluencing also with the 200-day moving average. Right, so that's for the sterling dollar, still using 1.2670 as my short-term pivotal resistance to maintain today intraday bearish bias. Up next will be the Asia Pacific currency against, okay, give me a minute, against the US dollar. All right, so let me find out where is it. All right, okay, yeah, that's the Aussie dollar over here. So starting with the Aussie dollar continues to trade sideways. So this is this was the intraday high at 63.67 right after the 25 basis point cut by RBA. Then it starts to trade sideways, it can't break above it. During today's Asia session, there was also a retest of it, but the hourly candle starts to form a doji-like candlestick with small little body, indicating a bit of hesitation by the bulls to actually surpass 63.67. So this will be still my first resistance level to watch, but the key pivotal resistance still remains at 64 figure level. Why? Because of this dotted gray line. So if you look at this dotted gray line, you go to the daily chart for those who missed out the previous analysis. Is this former major range triangle-like range resistance or major triangle-like range configuration, major range support level. Okay, this is a dotted gray line here from 13th of October 2022 low. Then on the 11th of December, price action staged that massive breakdown, a major bearish breakdown below the major range support of this range triangle range like configuration that was previously taken shape since 26th of October 2023 low, and now this major range support now turns into a significant pullback resistance at the 64 figure level. All right, so still no change using the 64 figure level as my short-term pivotal resistance level for today. We will still maintain that intraday bearish bias, but price action got to break down below the first support level at 63.30 in order for the bears to gain more potential traction to expose the next near-term support level at 63 figure and potentially even 62.70, which confluence with the 20-day and the 50-day moving average as well very closely. Only hourly close and a push up above 64 figure level will see the invalidation of today's intraday bearish bias to see the continuation of this mean reversion rebound that has taken shape from 3rd of February, extending its upwards trajectory to visit the next intermediate near-term resistance level at 64.30, followed by 64.70 over here, which is the minor swing high area of 10th of December. Right, so that's for the Aussie dollar. Now, turning our attention will be the dollar yen. So the dollar yen continues to remains weak over here. So what I could see over here is that, interestingly, the price action starts to shape a similar high, but the RSI starts to show a lower high, okay, indicating some form of bearish momentum that has started to creep back into the dollar yen after we see that bounce that's taking shape on Tuesday. Right, so I don't want to put it so tight, my short-term pivotal resistance to be so tight to correspond to this current minor swing high area for today's Asia session, intraday high at 15228. So this 15228 or 15230 round up will be my first resistance level, but the key pivotal resistance still lies at 5280, which is my 200-day moving average, acting as a similar graphical resistance as well. So as long as this bounce didn't surpass above 15280, we will still maintain that intraday bearish bias on the dollar yen, looking into a fact that this potential minor bounce that has taken shape on yesterday's Asia session low may have already ended or come close to a terminal point at 15228 because of that bearish divergence that we see on the hourly RSI. Next support level to watch in the near term or the intraday basis will be 15095/70, which is also the intraday low of previous week, 7th of February as well. And if you go to graphically, it's the one-time Fibo extension taking from the high, this ongoing medium-term downtrend or minor downtrend, I would say, from 10th of January high, and also graphically this minor congestion area of 5th of December to 6th of December. So i.e. only a breakdown below 15070 will potentially see the deceleration of this impulsive down move taking place, or the acceleration of the down move taking shape, exposing the next near-term support at 14965/30, which is the 1.236 Fibo extension. Graphically, the minor swing low of 6th of December and 9th of December, and as well as the lower limit of this ongoing minor descending channel that is taking shape since the high of 10th of January. Only an hourly close above and a breakout above 15280 will invalidate today's intraday bearish bias on the dollar yen to see a squeeze up to revisit the 200-day moving average that is confluencing at a similar resistance with the upper boundary of this minor descending channel at 15370. All right, so that's for the dollar yen, still maintaining that intraday bearish bias using 15280 as the short-term pivotal resistance level. All right, so onward next will be the short-term intraday technical outlook on the major stock indices, starting with the Hong Kong 33 representing the Hang Seng Index. So the Hang Seng Index continues to manage to did that pullback, and in today's Asia session, it managed to stage a rebound as well by shaping this bullish hourly candlestick hammer, the bullish hammer candlestick formation at the start of the first hour of the Hong Kong trading session for today. So with that, still no change, using yesterday's Titan key short-term pivotal support level at 22,470, still maintain that intraday bullish bias on the Hong Kong 33. First resistance level to watch, 23,120/270 for today, which is a Fibo extension level as well of the 0.618, taken from the low of 23rd of December. And also graphically, if you could look back over here, is the minor swing high area of 7th of October and 8th of October last year. Above 23,270 may expose the next intermediate resistance at 23,830, which is the 0.618 Fibo, 0.764 Fibo extension, and the upper limit area of this ongoing bullish acceleration trend that has kickstarted from the low of 3rd of February. Only an hourly close and a breakdown below 22,470 will invalidate today's intraday bullish bias on the Hong Kong 33 to kickstart a minor corrective pullback, exposing the next support level on the intraday basis, 22,130. A breakdown below it may see 21,630 next. Right, so that's for the Hong Kong 33. Now, what's up next will be the Japan 225. So the Japan 225 managed to actually do a sell-off in today's Asia session, but this sell-off managed to form a long tail candle and thereafter it start to form a kind of a doji-like formation in the last 2 hours as we are speaking, or a small little body candle, so indicating that the sell-off that has taken shape at the start of the Japanese stock market trading session at this 8:30 a.m. Singapore time has starts to get subsided, and this subsiding, we call it signs of, or the easing off of this intraday bearish momentum, comes exactly at the pivotal support that we highlighted yesterday at 39,045. So with that, with this potential minor intraday bullish reversal that could take hold because of this series of doji-like candlestick after the initial sell-off that has taken shape at the start of the Japanese stock market trading session at 8:30 a.m. Singapore time, we will still maintain that short-term intraday bullish buyers within this very complex sideways range configuration of the Japanese 225 or the Nikkei 225 that has taken shape since the low of 3rd of February this year. So 39,045, no change. Short-term pivotal resistance support level. Pardon me, I repeat again. 39,045, short-term pivotal support level. Still maintain that intraday bullish buyers within this short, minor, complex sideways range configuration. Today's intraday resistance level to watch. The first level will be much lower at 39,480. It seems to be that there's this minor descending trend line that preventing the bulls to get surpassed since the high of 13th of February. Got rejected on last Friday, 14th of February, and also got rejected earlier on Tuesday during the early noon Asia session as well at 39,000. Now I think as a near-term resistance at 39,480. All right, only a breakout above 39,480 may open up scope to see the next intermediate resistance zone coming in at 39,710 / 39,830. With an hourly close, breakdown below 39,045 will invalidate today's intraday bullish bias to see it floating down to the bottom of this sideways complex range configuration. First support to watch will be 38,770, which is the 200-day moving average as well. Breakdown below it sees the lower limit of this minor sideways range configuration that is still in place since 3rd of February, acting as a next near-term support level at 38,380. Right, so that's for the Japan 225. Next up will be the European stock market using the which is the German 30. So the German 30 managed to bounce up as expected on our first support level that we highlighted yesterday, 22,714 level, but it can't surpass above the resistance zone that we highlighted as well. The first resistance zone, which is 22,930 / 23,030. So I do not want to tighten my short-term pivotal support levels to be so tight at 22,714 unless we have an hourly close during the European session above 23,030, then I could use 22,714 as my short-term pivotal support. So for now, no change. Still use yesterday's short-term pivotal support level at 22,600 short-term pivotal support level to maintain that intraday bullish bias for the German 30 above 23,030, sees the next intermediate resistance coming in at 23,130, that thereafter followed by 23,285, which is defined by a Fibo extension cluster level. Only an hourly close and a breakdown below 22,600 will invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support level in the first step at 22,460, followed by 22,310. All right, so that's for the German 30. Now let us now take a look at the major US stock indexes, starting with the US Wall Street 30. So the US Wall Street was pretty much boring, still continues to trap within our neutrality zone. So yesterday it came down, printed an intraday low of 44,301, almost very close to the lower neutrality zone of 44,190. So no change, still potentially expect to trade within this sideways range configuration between the neutrality zone of 44,840, which is also the minor descending trend line that is in place since 31st of January, and the lower limit of the neutrality zone will be 44,190. Unless we have an hourly close and a breakout above 44,840, then I could validate a intraday bullish bias move on the US Wall Street 30, exposing the next near-term resistance level at 45,090/100, which is the current all-time high area. Above it sees the next resistance coming in at 45,500/700, being defined by a Fibo extension cluster level. So still no change. Maintain that neutrality stance for a potential sideways movement between 44,840 and 44,190 on the US Wall Street 30, representing the Dow Jones Industrial Average. Now, onward next will be the Nasdaq 100. So the Nasdaq 100 continues to actually came down, tested our first support level, almost coming very close to the short-term pivotal support level as well. Printed a low of 22,107. Okay, 22,107, and shaped that bullish reversal hammer candlestick formation at the 3 a.m. mark yesterday. So still no change, still for sure using the 21,970 as my short-term pivotal support level to maintain that intraday bullish bias on the Nasdaq 100. Next resistance level to watch will be 22,360/22,410, which is a Fibo extension cluster level. Only a breakdown below 21,970 with hourly close below it will negate today's intraday bullish bias to kickstart a minor mean reversion decline sequence, exposing the next near-term support level at 21,845 and potentially even 21,680, which correspond to the 20-day moving average as well. All right, so that sum up the intraday technical outlook on the major stock indices. So now let us turn our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, there is actually a third test at the current all-time high level at 2,940/2,945 in today's Asia session as well. It's rather remain firm. Hourly RSI seems to be now being supported by this ascending trend line as well. So no change. I don't want to tighten my key short-term support level to be so tight at 2,903 unless we have a clear breakout above 2,945. Then I will tighten the short-term pivotal support to 2,903. So still using 2,880 as my short-term pivotal support level. Above 2,945 potentially sees the next near-term resistance to come in the first step at 2,990/3,000 psychological level, and as well as a Fibo extension cluster level as well. Only a breakdown with an hourly close below the key pivotal support at 2,880 will negate today's bullish tone to kickstart a minor mean reversion decline scenario, exposing the next near-term support at 2,845, which correspond to the rising 20-day moving average, and as well as the the medium-term ascending channel lower boundary, which is the support level, also coming in at 2,845. Only a breakdown below 2,845 may trigger a steeper mean reversion decline sequence, exposing the next near-term support level at 2,812/2,795. All right, so that's for gold, still maintaining that intraday bullish bias using 2,880 as my short-term pivotal support level. Now, what's up next? Lastly, for the West Texas crude oil. So the West Texas crude oil yesterday, we do have a bullish bias for a potential mean reversion rebound scenario. So the mean reversion rebound scenario is now coming very close to our said resistance zone that we highlighted yesterday, which is so the 20-day and the 50-day moving average, acting as a similar resistance at 72.90. So we'll be using this 72.90 as my short-term pivotal resistance level to look out for a potential inflection level where a potential bearish reversal may take shape on the intraday basis for West Texas crude oil. So flipping to an intraday bearish bias using 72.90 short-term pivotal resistance level. First support level to watch for today will be at 70.60, which is the minor swing low area of 13th of February and of 17th of February. Only a breakdown below 70.60 may unleash or trigger further potential weakness to expose the next near-term support level at 69.80, which is the minor swing low of 27th of December. However, if price action starts to have an hourly close and a breakout above 72.90 short-term pivotal resistance level, today's intraday bearish bias will be invalidated to see the continuation of the extensive move of this ongoing mean reversion rebound scenario, looking forward towards the next near-term resistance zone that may come in at 63.90/74.67. We also correspond to the 200-day moving average acting as a resistance at 74.67. All right, so that also sum up the intraday technical outlook on these broad-based key cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So key data to look out for today will be upcoming in the next about 1.5 hour time. Will be 3 p.m. Singapore time. This is the UK inflation data. So market will be looking at the core inflation rate, which is market is expecting it to be coming slightly higher at 3.7% year on year. So this could potentially impact the sterling dollar and as well as the sterling crosses in the FX market. And heading up towards the US session for today will be rather quiet, not so much of a first tier data to look out for. So second tier data will be housing stats, will be out at 9:30 p.m. Singapore time. And the most important one will be at 3 a.m. Singapore time, where we start to see the release of the FOMC minutes that could impact almost all cross asset classes. Okay, but market is still expecting potentially is the less dovish Fed, so that shouldn't be much of a major change in the minutes as well. All right, then thereafter, we have another Federal Reserve official speaking at 6 a.m. Singapore time tomorrow, Fed Jefferson. And right early in early Asia session tomorrow, we have Aussie dollar, Aussie land or Australia labor market data. So this considers the tier one economic data for Australia that will come in at 8:30 a.m. Singapore time, the unemployment rate, and followed by the unemployment change. And at 9:15 p.m. we have monetary policy from China using this loan prime rate, both the 1 year and the 5-year loan prime rate. All right, so do as see whether the PBOC will continue to inject more liquidity into the Chinese economy that could potentially impact the Hang Seng indices as well. So that will be at 9:15 a.m. Singapore time. All right, so that sum up today's daily dose of market insights. I'm Kelvin here. So I wish you all a great day ahead, and also a heads up, tomorrow I'll be away Thursday, and as well as Friday I'll be away as well for for 2 medical appointments. So daily dose will resume on next Monday at the same timing at 1 p.m. on the 24th of February. So I wish you guys a great week ahead, and we shall speak again on next Monday, 24th of February. Thank you very much.